listing on London, and so France was always very keen to try and drag more business to them. But Britain had one advantage: it's called English.
Can I just ask you? I mean, in terms of why this is relevant. I mean, why does it matter? Is it simply a question of the British being able to say, well, the French being able to say, I've got a bigger market than you?
Maybe some of that, I suspect, but more to the point, actually, it really is about attracting new business, because if you can get a company to float on your market, it's giving a profile to the market itself, and with that, of course, quite often then goes, where's the head office, where the decisions are being made, and is there any more likely that that investment is being carried out locally in the United Kingdom? And so, yes, it's important the stock exchange is seen to be successful. It attracts other businesses, and of course with that goes the legal work, the accounting work, everything related to it, and that's where London's got an advantage. It has that background range of services, and of course internationally and in the right time zone, halfway between China and America.
So London has these oil and gas companies, for example, partly why it's doing well, but is it that the UK is doing well, or is it just that other countries are doing badly?
It's got very little to do with the UK economy, actually, because most of these companies, as I said, a lot of the investment is actually overseas. But it's a good reflection, so that if the UK economy is doing badly and the market's doing badly, they tend to be reflect each other. So, no, London needs to have a sensible international market. Success attracts success. Since we've had Brexit, I'm afraid it's been going the wrong way. The question is, can London get its pride back and particularly start attracting more smaller company areas? The large companies, particularly tech, were mainly always going to go to the States. Where London can operate is smaller, high-tech businesses. That's why we established a few years back something called the AIM market, the Alternative Investment Market. But it was for those small companies, higher risk, but those are the businesses of tomorrow, not the car companies, but the tech businesses.
We've been talking earlier on in the programme about the UK government calling the northern powerhouse the levelling up of the north of England compared to the south. And London is essentially the UK's financial centre. Just how resilient is the UK economy as a whole on staying on as a financial hub?
London's, the United Kingdom's going to have to work very hard at doing so. As you say, London is the focus of it, but there are big financial centres in Glasgow and Edinburgh and in Manchester, but nowhere near the same sort of scale. The problem's been is that with Brexit, it's not so much all the banks lifted their skirts and rushed off to the continent. No, it's the next department that opens in that particular bank, and suddenly realise if the head office moves somewhere else, the next department actually isn't in London anymore. So it's over about a 10, 15-year period, you'll suddenly realise what's happened to the level of that financial services industry. So what Britain has to do is to actually now get on the front foot, market itself effectively and say, this is the place in this time zone where you should be able to raise money cost effectively. But I have to say the London Stock Exchange is absolutely useless at marketing itself.
I want to talk about France just for a moment. It's done well from all these luxury stocks, hasn't it? What's been the impact of this slowing demand in China for those luxury products? Has that come into this Britain potentially sort of taking back over from it?
Well, in terms of fashionable stocks, we don't have that. We stick to alcohol. We're much better at that. So in terms of actually having some good whisky stocks to be able to do. But no, the French have always been focusing very much on the fashionable areas, and that's great, whilst it's fashionable. But if you're the proud owner of next year's tank top, no, it's not actually going to be a great success. They need to broaden it out. And the trouble with Paris is, again, it is French. It's not as international. And the French have always been extremely jealous of the fact that actually more international business came to Britain. But it was hardly surprising because we had the international language, English, or probably, I think you'd probably call it American.
Right, Justin, good to talk to you as always. Lovely to have you on the programme. That's Justin Urquhart-Stewart, investment manager and business commentator.
OK, well, let's go on to talk about luxury shopping. We touched on it a moment ago. The travel retailer DFS has announced a new retail and leisure complex in the Chinese tropical island of Hainan. The company, which is owned by LVMH, says the 120,000 square metre site will open by 2026. It says it wants to attract over 1,000 luxury brands and become a premier destination for accommodation, dining and entertainments.
The UK's largest retailer, Tesco, has raised its annual profit forecast as food inflation eases. The company says it anticipates food inflation to continue to fall in the second half of the year. Shares in the store, which are already up 16% this year, rose 2.3% in morning trading. The rise comes after Tesco said it expected profits for next year to be between $3.1 and $3.2 billion.
Shares in the airline SAS have slumped by 95% after a financial restructuring deal was announced to save it from insolvency. Scandinavia's biggest carrier went into bankruptcy protection last year, blaming a collapse in trade after the pandemic. A $475 million rescue deal backed by private investors and France's KLM